So the quick context is we have a company that buys fans and then sells fans, okay, and what we are told is, so they use LIFO, and between 2006 to 2008 they purchased 12,000 units. In 2006 that's the unit cost. In 2006 they only sold 10,000. So what's their safety stock at the end of 2006? So the ending inventory effectively is 2,000 fans. Sales price is given here. So if you just look at the LIFO method, beginning inventory is 0. That's the purchases, which is 12,000 into 100, and then goods available for sale. Ending inventory is 200,000. Where is this coming from? Yeah, so this is your the $100 multiplied by what? 2,000. Multiplied by 2,000. Okay, so that's the ending inventory, cost of goods sold, and these are your income statement numbers. Now in the subsequent years, effectively what the company is doing is buying fans, 12,000 fans, and selling all of them. Okay, so that inventory, you can think of the safety stock of 2,000 or the 200,000 in dollar terms. Let's just call that safety stock in dollar terms is 200,000. So that sticks for 07 and 08. So even in 08 we bought 12,000 and sold 12,000. Okay. So 07, 08, is there any LIFO liquidation happening in 07 and 08? No, because we are simply selling everything that we buy in the year. But in 09, we purchase 12 and sell 13. Is there LIFO liquidation here? Yeah, because we sold more. Now, when we sell more for a company that is using LIFO, for the extra 1,000, obviously, what does LIFO mean? Last in, first out. So, when the company sells the first 12,000, let's say that from January to November they sold 12,000. So, those 12,000, what would they be costed at? 115. They would be costed at the most recent purchase price. What about the remaining 1,000? That would be costed. So now this is the LIFO liquidation. This is now dipping into this cost of 100. So the fact that we are dipping into that old very low cost, which is 15% lower, will that inflate our profits? Will that impact the revenue or the sales? Sales? Yeah, it will not impact sales. It will impact it will artificially show a somewhat higher profit, because it will artificially show a somewhat lower cost of goods sold. Okay, now what is the impact of this LIFO liquidation? So what part of the profit, and hence what part of the profit margin is coming because of LIFO liquidation? So 15 per fan. Yeah, 15 per. So now I want everybody to be able to figure this out. So the gross profit for 09 is 1,315,000. How much of this is coming because of LIFO liquidation? 15 into? So it is 15 into 1,000. Why 1,000? Because that's the amount that we are dipping in. Why 15? Because the current price of those fans to us should be 115. So, but the LIFO price is 100. So the exact amount is 1,000 into 115 minus 100. So that's 15,000. So very conveniently, this 15,000 part is coming from LIFO liquidation. So a nice simple example that illustrates LIFO liquidation.